Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you today to break down an absolutely electric day on Wall Street. We've got a lot to unpack, from historic milestones to some serious turbulence in the tech sector, and plenty of insights for both your short-term moves and long-term wealth-building strategies. So, grab a coffee and let's dive into the action. First up, let's talk about the big picture. Wall Street is celebrating a massive milestone. The Dow Jones Industrial Average smashed through the 50,000-point barrier for the first time ever, closing with a stunning gain of over 2%. The S&P 500 and Nasdaq weren't far behind, each rallying around 2% as well, showing broad strength across the market. Even the Russell 2000, representing smaller companies, surged over 3%, hinting at a healthy rotation beyond just the mega-caps. For long-term investors like us, this kind of broad-based rally signals underlying economic resilience, but keep an eye on volatility. Markets at all-time highs can be prone to quick pullbacks. Now let's zoom in on the winners of the day. The tech sector, despite a rough week, staged a fierce comeback, with some heavy hitters leading the charge. Nvidia was a standout, jumping nearly 8%, fueled by renewed optimism around AI infrastructure spending. Advanced micro devices also powered ahead with a similar gain, showing that chip stocks are regaining momentum. These short-term pops are exciting, but for us long-term players, it's a reminder to focus on secular trends like AI and semiconductors, industries that aren't going away anytime soon. On the flip side, not everyone joined the party. Amazon took a hit, sliding over 5% after announcing a massive $200 billion capital expenditure plan for 2026, spooking investors with concerns over near-term profitability. Stellantis also cratered, down a whopping 23% after a $26.5 billion write-down tied to scaling back EV plans. These short-term stumbles can create noise, but as long-term investors, we should ask, are these dips buying opportunities or signs of deeper challenges? Something to chew on. Looking at the market movers shaking things up, Nvidia and Intel were among the most active, both posting solid gains as investors piled back into tech. Tesla also rebounded with a 3% uptick, shrugging off earlier weekly losses. But Amazon's drop kept it in the spotlight for the wrong reasons, with high trading volume reflecting the market's mixed feelings. For us, these movers highlight where sentiment is shifting. Tech remains a battleground, and staying diversified is key for the long haul. Speaking of volume, the most traded stocks today tell a story of their own. Nvidia and Amazon dominated the action, showing just how much attention tech is getting right now. Stellantis also saw massive activity, likely driven by that huge write-down news. High volume often signals emotional trading in the short term, but for us long-term folks, it's a cue to watch for stabilization before making moves. Beyond the numbers, there's a bigger narrative unfolding. The market is showing signs of healthy broadening, with rotation out of tech into other sectors like industrials and value stocks. This diversification is a positive signal for us long-term investors. It means the rally isn't just a one-trick pony. However, there's caution in the air with tech's recent underperformance and concerns about AI spending outpacing revenue growth. Plus, whispers of a hawkish Fed under potential new chair Kevin Warsh are making some risk assets jittery. It's a reminder to stay balanced in your portfolio and not chase every hot trend. Let's shift gears to earnings, as this week has been packed with heavyweights reporting. Amazon's results disappointed on the bottom line despite strong holiday sales, with that huge CapEx plan weighing on sentiment. On the brighter side, Philip Morris beat expectations with solid growth in smoke-free products, while Uber missed on earnings but still showed robust user growth. Looking ahead, we've got big names like Meta Platforms, Microsoft, and Disney set to report. Each could move the needle for their sectors. For long-term investors, earnings season isn't just about the numbers. It's about spotting trends in consumer behavior and innovation that shape the next decade. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and what they mean for your portfolio. Taking a step back to look at the past week's top performers, Lumentum Holdings soared over 24%, showing strength in tech hardware, while Hershey's jumped nearly 18% as consumer defensive stocks gained favor. These weekly moves can highlight emerging leadership, and for us, it's a nudge to consider rebalancing into sectors showing relative strength over time. On the other hand, the past week's biggest losers paint a stark picture. AppLovin plummeted nearly 33%, and Robinhood dropped over 29%, reflecting the brutal sell-off in high-growth tech and fintech names. These short-term corrections can be painful, but they often create opportunities for patient investors to pick up quality at a discount, something to keep on your radar. Sector-wise, industrials managed to hold steady with a slight uptick over the week, showing resilience amid the broader volatility. Consumer defensive stocks also gained ground, up over 1%, as investors sought safety. This rotation into more stable sectors is a classic defensive move, and for long-term portfolios, it's a reminder to have exposure to non-cyclical areas during uncertain times. Conversely, basic materials and healthcare took the hardest hits over the week, down nearly 5% and over 3% respectively. Tech wasn't far behind, shedding close to 3%. These sector declines reflect broader concerns about economic slowdown and tech overvaluation, but they also signal potential value for those with a contrarian, long-term mindset. Wrapping up the broader market trends, the S&P 500's push toward new highs is encouraging, but warning signs like the Hindenburg omen and elevated volatility remind us not to get complacent. As long-term investors, we know markets don't move in straight lines. Building a resilient portfolio with a mix of growth and value is how we weather these cycles. And over on the Nasdaq, the rebound today is a relief after a tough week, but the tech rout earlier in the period echoes lessons from past bubbles. For us, it's about staying selective. Focus on companies with real earnings power, not just hype, to anchor your long-term strategy. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stick with us for daily updates, deep dive SWOT analyses, and exclusive insights to keep your investment game sharp. Hit that like button, subscribe, and we'll see you tomorrow for more market action. Stay savvy, everyone.